Hi guys, welcome back to the channel, Subsistence Traveling. I'm your host Jay. Today we're talking about 10 transport stocks to buy now. Okay, and this is a very important sector of our economy. Okay, so I'm gonna give you guys a moment to look at the disclaimer. And so here's the case for the transport stocks. They're an essential industry. Basically, goods have to move from place to place, whether it be from the factory to the warehouse, from the ports. Goods have to move from place to place before we're able to buy these goods. So you're always going to need transportation, obviously. It's an essential industry, but it also there are parts of the industry that can be very cyclical. And this is the part of the cycle where transportation heats up. Okay, especially if we see infrastructure spending and imports and stuff of that nature, you'll see that transportation companies get very busy. This sector has very low debt loads. This is one of the few sectors that you're actually seeing the debt loads go down during this crisis. Um, See, this is a very capital intensive industry. Whether you're dealing with trucks or rails or planes, whatever, it's a very capital intensive industry. So the survival in this industry depends on debt management, and companies in this industry tend to be able to manage debt well because it's very easy to go bankrupt in when you're dealing with a capital intensive business. So for the most part, a lot of these businesses have very low debt loads, and right now you can find very excellent valuations. A lot of companies trade below two times book, especially in this stock market where the valuations are crazy. This is a one sector where you can find some decent valuations. And so, as always, the criteria for selecting these stocks, we look at profitability, valuation, liquidity and solvency, dividends, also the fundamentals of the sector slash industry. And, you know, the fundamentals for this industry is good right now. I believe the goods economy should hold steady throughout this crisis. The goods economy should hold real good. And so the first stock I want to look at is Knight Swift Transportation, ticker symbol KNX, priced at $44.50, price to earnings of 22, price to book of 1.65, pays a dividend of 0.72%. And this is the largest trucking company in the US. Okay, so this is definitely something to look at. I mean, from the beginning of the crisis, the truckers have been doing very good business. It obviously it's an essential industry, so they haven't been closed down. Matter of fact, you've had shortages of trucks at one point, so and you're having a lot of supply chain issues and so forth. So these guys are staying busy. Next is ZTO Express, ticker symbol ZTO, priced at $34.82, price to earnings of 38, price to book of 3.9. It pays no dividend. This is a Chinese courier service, something similar to like a UPS or FedEx. They serve China, obviously. This is actually a hot stock. A lot of people right now are really into Chinese stocks, so this one has been moving to, close to four times book, which is very high. But again, China is very hot right now. They're actually grow their economies doing. They're probably one of the best economies in the world right now. So ZTO Express is a good long-term hold, especially with e-commerce taking off the way it is in China. This is definitely something to look at. All right, so we have Forward Air Group, ticker symbol FWRD, priced at $78.72. Price to earnings of 37, price to book of 4, pays a dividend of 1.07%. Again, this is an expedited ground carrier. They focus on not only ground but also expedited air freight, just expedited logistics services, period. You know, definitely one to look at, especially in this time where the postal service is having issues. UPS, FedEx, they're having delays and so forth. In these times, you're gonna find a lot of businesses having to deal with alternate carriers and alternate shippers, due to what's a lot of things that's going on right now. So definitely something to look at. All right, so we have Costamare, ticker symbol CMRE, priced at $8.13, price to earnings of 9.38, price to book of 0.74, pays a dividend of 4.92%. Okay, and excellent valuation. This is a shipping company. I say shipping company, they own ships and they transport dry goods. These companies should do very well in this period, especially right now. You have a trade imbalance. The trade imbalance has never been this high right now. So when you right now, I'm here in California, and every time I drive is I see just ships full of cargo, and from what I understand, there's a shortage of shipping containers right now. So it's the ships should do very well in this time. Everything, we all know that everything is made in China right now, so we have to import. So, and then we're in a lockdown. So next is Kansas City Southern, ticker symbol KSU, priced at $211.45, price to earnings of 31.30, price to book of 4.88, pays a dividend of 0.83%. Okay, and this is a railroad company. They own railroads in the Midwest, and they also they own the only line that goes from the U.S. into Mexico. And as we all know, a lot of things are being made in Mexico right now. So, and a lot of companies have their supply chains in Mexico. So obviously, they're doing very good business. Definitely something to look at. All right, so we have MIXT Telematics, ticker symbol MIXT, priced at $13.80, price to earnings of 43.42, price to book of 2.43, and it pays a dividend of 1.88%. Okay, this is actually a technology company, but they focus on technology that allows companies to manage their fleets. Okay, and especially going forward in the kind of economy that we're going to have is a more of a physical logistics is going to be very important in the future. And obviously technology that allows companies to manage their fleets is going to be very important. So this is a South African based company, so definitely something to look into. All right, so we have Martin Transport, ticker symbol MRTN, priced at $17.61, price to earnings of 21.15, price to book of 2.35%, dividend of 0.91%. This is another trucking company. However, they specialize in refrigerated trucking, and especially with the high demand for I guess ordering food and so forth. I believe this should do very well. Refrigerated trucking should do very well going forward. Definitely, and they're the largest refrigerated trucker in the country, so definitely something to look at. All right, so we have Grupo Aeroportario del Centro Norte, ticker symbol OMOAB, price at 48.73, price earnings of 29.4, price to book of 4.54, and pays no dividend. Okay, and this one, I own this one. It ran up very fast. I bought it in the 20s, and it paid a dividend when I bought it. Now, I guess it went up so fast that it no longer pays a dividend. But this company owns several airports in Mexico, especially in the northern central part of Mexico, close to the U.S. border. Definitely something to look at. Eventually, this area will be very important. And obviously, as the wealth in the area increases and travel increases, but also cargo and so forth, air freight and so forth. So this is definitely something to look at. This is a recession resistant asset. I mean, it's an airport. It's very rare that airports really go out of business. I mean, it's a private company, but there's a lot of agreements and contracts involved. So definitely something to look at. All right, so we have the Hub Group, ticker symbol HUBG, priced at $58.75, price to earnings of 24.36, price to book of 1.77, no dividend. And this is a all around diversified logistics company, everything from trucking to air freight to ground transport, just a just an all around logistics company. And especially with the rise of e-commerce, this company has been doing very good business. So this is definitely something you want to take a look at. Last but not least, we have CSX Transportation, ticker symbol CSX, priced at $86.83, price to earnings of 24.36, price to book of 5.13, pays a dividend of 1.2%. Okay, and this is a railroad. They operate mainly on the East Coast. And then, they should do very good business. You're starting to see a lot of the ports, on the East Coast have been getting dredged over the years. So, they're trying to bring in bigger ships on the East Coast, as opposed to the West Coast. But yeah, this should do very well in the future, especially if we see higher oil prices. Railroads tend to do very good when you have higher oil prices. Because they're considered a very energy efficient means of transporting, especially when you're transporting a large amount of goods. And if you see infrastructure spending and things of that nature, yeah, you definitely this is something to look into. All right, so here's some other companies to look at. We have TFI International. These companies didn't make the list, but nevertheless, these are some very good companies you want to take a look at. TFI International, this is a Canadian-based company. They're a trucking company. Today, they announced that they'll be purchasing UPS freight business. So definitely, I was considering buying it even before I heard the news, but especially after that, that's big news right there. We have Greenbrier, ticker symbol GBX. Now, this is a company that makes rail cars and a lot of stuff for the rail industry, and I think this will do very well, especially you have a shortage of shipping containers, I think pretty soon you're also going to hear there's a shortage of rail cars. This industry has been an industry that, since coal prices fell, years ago, not much has been really, especially in the railroad industry. So I think a company like Greenbrier, I believe they're they're gonna um they're gonna boom, because I believe you're gonna need more rail cars and so forth. Kirby, ticker symbol KEX, they own inland land barges and stuff of that nature, um, helping people to ship stuff on rivers, especially when you're talking about on the Mississippi and so forth. We have Uber, ticker symbol UBER. I think Uber and Lyft are very interesting. I know they're not yet profitable, but I think eventually these companies will become profitable. I think uh, our transportation needs are going to change in the future, especially, and I think public transport, you know, um, I don't think our public transport, especially here in the U.S., I don't think the public transportation system in the future will be able to handle, because I see people having to move even further out of these cities just to be able to find somewhere affordable to live. And it gets to a point where public transportation does not work. And I think Uber and Lyft will eventually become that alternative, and I think eventually these companies will become profitable, especially they already have different diversified businesses, like food delivery, bicycle rental, and I think Lyft recently announced that they're offering car rentals. So I think Uber and Lyft is something to look at, for the long term. Fortress Transportation and then Infrastructure, FTAI. This company invests in different infrastructure and transportation projects. A lot of they in aviation, like aviation as renting private jets and or leasing private jets or something like that. Um, uh, Oil and gas as far as transporting oil and gas, and so I think that's one to look at. Landstar is a logistics powerhouse, trucking, so just a logistics powerhouse on the whole. We have Macquarie Infrastructure. It's an Australian-based company. Everything from toll roads to parking lots to just infrastructure on the whole. So, matter of fact, they're working with Uber, because Uber has a helicopter service that they're trying out in several cities across the world, and Macquarie is a partner in that. Next, we have Expeditors of Washington, ticker symbol EXPD. Freight forwarding and you know just freight forwarding, air freight, um, you know different services of that nature, especially when you're dealing with the import and then export. China Southern Airlines. This is like the biggest airline in China, and I think they'll hold up very well. I want to thank you guys for watching the video. I hope that you like, share, and subscribe to the channel. As I always say,